Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's May 22nd. This will be our chart lesson for today. And the really nice and strong volatility that we had for so long seemed like has just completely dried up. And of course, we're going into the summer trading months, and a lot of traders take off, and a lot of the Wall Street types take off, and so things do slow down. That's not unusual at all. Seems like it's a little early, maybe, but anyway, regardless, the volatility's really slowed down. We finally had a pretty nice move, but it was late in the afternoon after, you know, after the 2 o'clock hour. So we spent the entire trading day there, 90% of it in this tight range of lows around 27.34 and the highs, you call it 27.41 or so. And so 7 point range. There's not a whole lot you can do with that. And really what you want to try to do is just get long at the lows and short at the highs. And really it tightened up to almost you know, a 3 or 4 point range right here. And there's just not a whole lot you can do with that. And one thing I want to make really, really clear, just so there's no confusion, when it gets like this, forget about failed second entries, because they'll be in both directions. Like here, you get a failed second entry short right here, and then it just turns around and turns into a failed second entry long. So you just get whipsawed back and forth. So forget about failed entries and things like that. When you're trading a range, especially one this tight, there's only two ways to trade it, or really one way to trade it, and that's to buy the lows or sell the highs. And then you still want a good signal bar. So if you do that, notice if you'd bought any of these lows or sold any of these highs, you'd have made money. But if you try to do anything different in the middle, you just probably got whipsawed. And so keep that in mind. That is the key to trading ranges. But let's back out just a hair. We'll go through the trades. It won't take long because there weren't many, and then we'll wrap it up. First trade I saw was actually this one. You could almost, you could almost make this one. This one probably should at least be green. I went back and forth about it. We're definitely, even though that looks like just a short amount of price action, this is from, well, let me see this is from, this started about before 5 o'clock my time. Before you really got the first entry, it was 8 o'clock. So that's 3 hours worth of price action right there. Just not much happening. So that's a long, so even though it doesn't look like a range, it does look rangy, but it doesn't look like a long-term big range. If you move this to the far right-hand side, you can see you basically have a second entry long, pull back first entry, pull back. If it breaks higher here, you get a second entry, and you get a little double test of this. And so if you got enough room here, I'd be okay with that trade. But you got to have enough room, and on my chart, there's really not. And you could say, hey, let me let it break higher and see if I can get a lemon order back here closer and see if it fills it. But you can see you wouldn't have got filled. You might have gotten filled right at the high, but that would be it on that trade. And it still would have worked regardless, but you can't take the chance that it's going to get past that double top. You need to have enough room to get out. If we were strong trending, I'd probably take a chance on that. But even though that's a fairly strong trend, we've been going sideways for 3 hours there. So that's not a strong trend any longer. So just keep that in mind. And you get a little breakout pullback long here and a higher low. So you might go long there. But again, it's right into the high of the day. So I'm not that crazy about it. But then you get a failed second entry long. And again, you're above the highs. And it turns and goes out and it goes above those triple highs. If we break above that, it's probably going to shoot up enough to at least get a scalp. And so I like that one. Both of these are really right. You could almost argue for them to be blue. Maybe not this one, but definitely this one. The problem is it's so close to the high that you just can't hardly risk it, because if it just goes one tick higher, you've had your break and a move to a new high with only a tick, and it could turn straight down. So you don't want to risk that. You're better off to wait till it moves up here like so, and then you get a big bearish bar and you're a long way away from the EMA. Now you've had your break, a couple legs up, you're a long way away from the EMA. That's not a great signal bar, and it's a relatively big one. You're usually better off to wait on the lower high. You get a lower high here, but you're right back in the range, and you don't have much room to get out, and you don't have a very good signal bar either. And of course, you get a failed second entry long here, but you're back in this range. And so if it goes lower and bounces right here, you're doomed. And I got at least one email. I think I got two different emails, people asking me about this very failed second entry long here. And that's why I mentioned when you're going sideways like this, forget about failed second entries, because you're just going to get whipsawed. So, you'll see it fail both directions. It might fail both directions multiple times. You can only go long at the lows or short at the highs with room to get out, or little failed breaks. And so that's all you're looking for. So there's nothing that sets up here until you get a failed breakout. And then I'm not crazy about it because you got 1, 2, 3 bars stacked up. And both of these are close enough to call them dojis. But really the reason you're finding resistance there is you've got this resistance line, and it never does come back into play. I think I moved it up there because it was an equal distance. Yeah, that's how I got that line. It was an equal distance off this trading range here. And that's a failed break. We went a little bit higher, but notice how it came back into play perfectly here. And so if you saw this range and got that measured move right there, when you saw this resistance and congestion right here, you would understand why you were getting it, because we were finding strong resistance there, and so we're probably going back. So if you understood that, I'd be okay going short there. So that's why that one's green. That's a little more advanced. It's a little aggressive, but if you are reading this properly and you know what's going on, and the reason you're finding resistance there is because this is a trading range, and it's an equal distance, and that's why you couldn't go any higher there, because because of that equal distance move, and that's where prices would probably turn. You would expect they might bounce right here again, either the midline or here, but they don't. They go all the way down, and they retest this low right here. I really thought we'd test the overnight low, but we never could get there. We went there and then a little further later on, but during the day we never could get there. So it was kind of interesting there. But anyway, you get this nice move down, and the only way to catch that is up here. So if you did catch that, you get rewarded for it nicely. And I would look, once we started going there, I would go ahead and measure this. Even though you may bounce right here, I would be looking for that measured move, and that puts you to at least here, but we went much further. So, and then of course you bounce down here, you got a low here, and you make another low, basically a double bottom, and then you break lower and turn and go up and make a higher. So this is a double bottom. You can treat that like a higher low. So I'm good with going long there. When it ended with another doji and a matching high, it makes you wonder. But again, if the reason we're finding support here is this is a strong support line, that's the reason we're getting this congestion here. Being that far away from the EMA and you start getting congestion, you may get a little failed break lower that ticks down, but pretty quickly you're going higher. So on that higher low and double bottom, I like going long there. Then we come back, we make another double bottom, but now we're going sideways again, and you get two matching lows. These are both fairly bullish bars, but I felt like you wanted to see if you got another touch, and you do right here. And this one actually went lower first and turns, it goes out the other side. I like going long right there. You don't want to go long up here. It's too big a bar, and it's too much movement. But if it did this on your chart, it went lower and turned and went out the other side, go long right there. And of course you find you're retesting this breakout here, and then you make a lower high and test it to the tick again with a nice bearish bar. I like going short right there. Just looking for it to come back down here again. And you actually get a failed break this time, and you're a little bit away from the EMA. Really, and this is a second entry. Notice that high, pull back first entry, pull back second entry, and it did. It closed right back where that support line was again, so it couldn't even. So this bar couldn't close under that really, basically. So I like going long to on that second entry to ride it back to the EMA and maybe back to here and maybe all the way back to the top. And it looked like it was going to be a spike in channel, which it is, but we never could even retest the high again. We turned down here. There's a failed second entry short here, but I already talked about that in these ranges going right back into the high right there, or what looks like the midline. You don't want to go long right there. Now you might let it break higher, and if you can get a limit order far enough back in here that you can get out before there, you might risk it then, but I'd stay away from those. And it would have worked, but you don't know that ahead of time. And there's just too much opportunity to get whipsawed. And of course, you get a failed break higher here, but this looks more like a midline and two tiers in this thing. So I would probably wait on a lower high here, especially coming back. Notice how we've started to find a little support above here. We closed above it and touched this line, and then we did the same thing here again. But this probably trapped people because we went lower and turned and went out the other side and then broke. That's a big bullish bar, and it broke one tick higher and turns back down and gives you a second entry short right there. And notice you got that little short-term trend line. Of course, we're looking for a possible retest of the high. This is where you got to be careful in the middle. At this point, I was treating this like the highs because this had been the highs for so long. And with that leg down, you'd look for a possible another measured leg down. And that's just a big bearish bar. I like going short right there. If you did get whipsawed right here on this, if I'd went long here and got burned, I probably wouldn't go short again because you could just end up getting whipsawed back and forth like right here. But if you're not in this long, you definitely want to go short right there. So we're probably going to come back down and make another leg down, and that's exactly what happens. So there's a nice bounce here, and it's a relatively bullish bar, but I'd want to wait on a higher low. You do get a higher low here, and notice what happens. It fails, and you get a failed second entry long right there. Look at that high pullback first entry. You pull back again second entry. And so it looks like it's going to be a failed second entry long, but you don't want to go short right into that. Then it looks like it's going to be a failed second entry short. Actually, it is a fail. It actually does turn out to be a failed second entry short, but there's just too much whipsaw and overlap and all that. So I'd probably skip this one and wait on something a little bit better. And then notice how many times we tried to go lower, and we finally traded lower here and then turned and went back up. You might go long right there because it's giving you a fairly bullish bar at the lows, and really you could probably argue for that one to be green, but we'd made a lower low here, so you might have had this line further down. You get more touches and stuff right there, and of course that does still bounce right off that new line, and so does this one. So you'd have had it down here at that point, but I'd just be a little bit worried. I'd want a higher low here, and you don't get it. And then you finally get you get that one tick lower, and then this bar is bouncing right off that line when it breaks higher. So I like that. I like that one. And both of these are about the same. They're just a little bit aggressive. They're not great setups, but they're giving you a chance to at least get long at the lows, but it's getting late in the day. And you can see how tight this this line up here, it actually kind of moved down some by this point. And you were in a tighter range. So it just is probably better to stay out of those kind of trades. So only get long at the lows or short at the highs, preferably up here. But this whole thing just stayed in this lower tier, and this is only about a 4-point range right here. And you got a failed break here, and then you got one here, and then these. If you kept it where it was originally, you might look at these as failed breaks, but really, by that point, there's your lows right there by the end of the day. And There's a second entry short up here, but my signal bar is not very good. This bar is really bearish, but it's not, your signal bar is here, and that's too bullish. And this bar's, if you go short way down here, it's too big. And if you use a limit order, waiting for it to break below here and put it back here, you don't get filled anyway. So I didn't mark that trade. If you had a good signal bar right in here, I'd say, hey, take it on that second entry. But I'm not going to go short below that bar right there. So anyway, not a lot of trades a day. And as long as you follow the rules of ranges, it's not that difficult of a day. Pretty much if you'd have bought any of these lows, you'd have had a winning trade. If you'd have sold any of these highs and really any of these highs across here, you would have had a winning trade. So just remember that. That's the key to ranges, is don't get, especially when they're small like this, or even smaller like this one here, and you don't want to get whipsawed, so to speak. So be careful with them. But anyway, I'm going to wrap it up. We'll be back again and do it tomorrow, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.